You know, the thing I love about crypto is that every day brings something new. Today's news is no different. In a recent interview, Paul Atkins, the newly appointed SEC chair, sent shockwaves when he said these words. The SEC doesn't need to, nor should it try to, regulate every nook and cranny of the technology. That statement alone has the potential to disrupt the entire industry. So let's break this down. Atkins started by explaining why he thinks regulation is important. He wants to make sure retail investors have a fair shot at making money in crypto without being scammed or manipulated. But then he dropped a truth bomb. He doesn't think the SEC should control every aspect of crypto. Instead, he wants a balanced approach that lets the free market decide what's best for the industry. He even suggested that certain crypto activities like staking and DeFi could be outside the SEC's authority. For those who don't know, that's a huge shift. Gary Gensler, the previous SEC chair, believed almost all cryptocurrencies were securities and tried to treat them like stocks. But Atkins thinks that's too heavy. Now this new approach gives crypto companies more freedom. They won't need to register every token sale or project with the SEC, saving them time and money. They can innovate faster and potentially attract more investment. This could lead to explosive growth in the crypto market, boosting prices and giving investors more options. Pretty cool, right? Well, not exactly. Let me explain. While Atkins wants to boost innovation and protect investors, some experts worry it's opening the door to chaos. You see, in finance, what seems like a great idea can turn bad really fast. This reminds me of the Roaring Twenties. Back then, people went crazy about investing in stocks. Banks gave out loans to anyone who wanted to buy stocks, and people used that money to buy even more stocks. It seemed like a great idea until it wasn't. The stock market crashed and people lost everything. Some experts say something similar could happen in crypto. Paul Atkins' plan sounds like a great idea, but it could lead to trouble. Here's why. First off, crypto is all about speed. People want to trade, lend, and borrow money fast and without hassle. But traditional financial rules can slow things down. This makes crypto less appealing. Plus, crypto is global. People from all over the world use it, not just Americans. So rules made for US investors might not work everywhere. Next, crypto is changing fast. New ideas come up all the time, and old ones get better. If rules are too strict, they might stop crypto from growing and improving. Lastly, crypto is built on new tech, things like blockchain and smart contracts. These things work differently from what we're used to. So old financial rules might not apply. Now, this isn't to say nothing should be regulated. People need to be protected from scams and unfair practices. But maybe the SEC needs to take a lighter touch. Instead of lots of rules, maybe they should focus on making sure markets are fair and transparent. This way, crypto can grow without being slowed down. So, what does this mean for you? Well, things are getting interesting in the world of crypto. The SEC might change how things work, which could bring both good and bad. So stay sharp and be ready. If you want to stay informed about what's going on in crypto, follow for updates. Don't miss out on this wild ride. Let me know what you think about this new SEC plan. Do you think it'll help crypto grow or cause problems? Drop your thoughts below. Remember, I drop new videos every week, so stay tuned for more updates.